Okay, hello. In today's video, we're going to do a quick follow-up from the video I posted last week, where we were trying to answer just kind of conceptually how a health insurance policy works. I'm pulling up the whiteboard for that, so you can kind of just remember the discussion. But again, it was just a conceptual discussion about how a health insurance policy works, and so we created an illustration of a health insurance policy that was fairly simple. It had a deductible, co-insurance, and out-of-pocket maximum. So today what we want to do is kind of touch on that a little bit more, but this time do it from a slightly more technical standpoint to put a little bit more teeth into the discussion. So to do that, we've got this program just loaded up, and what this program does is it's essentially the same thing as what we saw on the whiteboard, but it actually has the sort of the calculation built into it. And so what I can do is with these blue sliders, I can come in and construct a hypothetical health insurance plan. So I can say, okay, I set my deductible at 500 here. You can kind of see the outputs down here. And then I can set the out-of-pocket maximum at 5,500. I'm using the same example from the presentation we did last week to just keep things apples to apples, at least at first here. And then the co-insurance at 80/20. So now what happens is as I move this slider here, what we'll end up doing is projecting medical bills, claims, across this health insurance plan and kind of get an idea of how things will be allocated on an accounting basis. So I'm just going to start running that, and we can talk. And so what this is saying right here is, okay, so we've run $416 in medical expenses. And the one thing that I should stress is that we're doing this from the perspective of total medical expenses for a year. So I want to delineate things when we talk about the deductibles and that. The deductible is an annual deductible. It accrues throughout the year, and it accrues from all medical expenses. They don't have to be for the same thing. You don't pay for most plans, you don't pay a separate deductible every time you go into the doctor. You're just going to build up your expenses until you've hit your deductible and then move on to the next stage. So this is just all medical expenses. So we don't really need to pretend what happened. We just say you've got $416 in medical bills. And in this scenario, if that happened, you can see, okay, I've got $416. Of that, all 416 went to my deductible, and that's because I've got a $500 deductible. None went to my co-insurance, and that's again because we did not exceed the deductible with our expenses. And so my total cost here would be the deductible plus the co-insurance. And for me, the member, I paid 100%. That's the insurance plan paid nothing. And but we'll move it on. We'll say, well, throughout the year we have a few more expenses, and let's say there's a good number. We have $1,261 in medical expenses. So now we start to see some cost sharing from the insurance company, and you can see, okay, so we've hit our deductible. We've got the $500 there, and then my co-insurance is $152. And you can see my total cost, the 500 plus 152.20 is 652.20, and my percentage of claims is 51%. Now I'll try and just provide a little understanding of what's going on here. So what we're saying is that you've got $1,261 in medical expenses. And the very first thing you do as a member, you're going to pay the deductible first, and you pay that at 100%. So we just subtract that out, and we've accounted for that here. So you pay the 500. You've still got 761 remaining, and this is where the 20% co-insurance comes in. So you're going to say, okay, of this amount, now I'm going to pay 20%, and that number is 152.20. You can see the 152.20 there, and then the insurance company obviously pays 80%. So sorry, I lost my numbers there. 1261. That's not right. 1261 minus your 500 is your 761, and now times 0.8% because they're paying 80%. The insurance company's paid $608.80, and so kind of gives you an idea how the costs are breaking up. Now, what this 51% means, it says, well, if I took that $652 and divided that by the total claims, what's my percentage? And that's where we get the 51%. And then the same thing for the insurance company. So if we said the 608.80 and divided that by 1261, I get the 48.28%. So what happens is you'll see as we just kind of continue running the slider, the numbers keep accruing. And if you remember from our discussion, we found out that our health plan will hit our out-of-pocket maximum once total medical bills reach $25,000. Now our out-of-pocket maximum is $5,500, but we don't reach that until the total cost of medical bills gets $25,500. So what will happen is you look at the numbers down here. The counter will stop on everything except for this percentage of total claims, and so we'll run that, and then it stops. And the insurance carrier is now paying the rest, and so the growth on their cost is now accelerating, and we can carry that all the way through to 50,000. So you said, okay, if I have 50,000 medical expenses as a member, I would have paid 5,500. That would, in that case, amount to 11%, and my insurance company would have paid 44,500. One other quick thing we could look at is to say, okay, well, what if my deductible was a little bit higher? What if, I see a lot of plans that have, for example, a $3,000 deductible, and we'll say I've got the highest out-of-pocket maximum. This is the number that's allowed for a single under PPACA plans for 2017. And let's say, I don't know, let's say I've got a 70%, 70-30 co-insurance. What happens there? And I'll kind of spoil the surprise. We're going to cap out a lot sooner. It's kind of counterintuitive. I've got higher expenses, but I'm going to reach them faster. So I'm going to do that at about $16,000. Once the claim's at $16,000, yep, there we go. So I've capped out, and the reason for that, again, I'll just kind of pull up my calculator again real quick. You say, okay, the way I find that is I'm going to subtract my my out-of-pocket maximum. Oops, let me restart there. 7150 minus 3,000, and I have 4150. Now, remember, even though my numbers are higher, the spread between my out-of-pocket maximum and my deductible is actually smaller. In the last example, it was 5,000. Now it's only 4150, and then we're going to divide it by a larger factor. We're going to do it by 0.3, not 0.2 this time, and we get is 13,000. So what that means is that, and we have to add the deductible in there, so plus 3,000. What this number is telling us is that's the total medical bill amount that we would have to have before we hit our out-of-pocket maximum. Once medical bills hit that number, then under this plan design, we'll hit our out-of-pocket maximum, and the plan begins paying 100%. And then you can just see, again, the insurance company will continue to grow on their side, but as a member, our expenses are locked in at that price.